Hello everyone and welcome to Spark Finance. I want to take a look at what occurred in the 2020 year in the business markets. So to start off with, we have the Dow Jones Industrial Average, which actually performed pretty well. It had a 7.2% return for the 2020 year. If you look at the S&P 500, that one had a 16.3% return with dividends reinvested. It's actually an 18% return. So some of the stocks that did the best in the S&P 500, you had Tesla on a tear, up 730.4%. Now that one just joined the index right at the end of the year. I don't know if that one counts as much. Then you have Etsy, where you're making, handcrafted collectibles and selling them online, have handcrafted materials and selling them online. Then you have Nvidia, which is making graphic chips, computer chips, and is also big in the Bitcoin world. So Nvidia was up 123.5%. And finally, you have PayPal, which also made an announcement that they're doing some dealings with Bitcoin. That one was up 114%, also as people turned online for their shopping. Now, looking at the overall market, right, you had a record 722.1 billion people buying stocks on a margin. That's kind of scary that people are kind of leveraging up a lot here. You have three stocks that made up 50% of the S&P 500 gains this year. That's Apple, Microsoft, and Amazon. Three stocks. Now, if you extend that a little bit and you look at also Facebook and Alphabet, aka Google, and then also Tesla, that's about 18% of the S&P 500 index in terms of their market cap, being comprised of just six stocks. Like six stocks make up 18% of the S&P 500 index. That's kind of like the Pareto principle at work here. And it's kind of interesting to see. And there's a lot of people that say that that's kind of risky when you have so much of the index in just a few major technology stocks. Speaking of that, next up we have the Nasdaq with the technology stocks faring very well during the pandemic, up 43.6%. Keep in mind the normal stock market return is between 8 and 15%, usually around 10%, and this one returned over 44%. Also keep in mind, more stocks gained at least 400% in this past year in the Nasdaq than they did in any year going all the way back to 2002. So the Nasdaq is actually up 94% in 2 years. That's pretty crazy there. This is the best Nasdaq year since the 1998 to 1999 period. And remember, that's right around the 2000 bubble burst of the tech bubble, right? And at the time, the Nasdaq had actually gone up so high that where it is right now is only half of the highs that it had reached back then. That's pretty crazy when you think about it, when we consider the valuations that we're running at today. Also, the Russell 2000, which is a lot of the smaller cap companies, that one has doubled. And then if you're looking at the options market, people, once again, doing riskier plays here, more experienced investors or just people trying to leverage up a bit, the options actually set a record for 2020 as well. Then you have gold, a record up 24% for the year, near the record, 1,895, it closed out around there. This actually returned better than the S&P 500, better than stocks, right? And this is the best return for gold since 2010 when it was coming out of the 2008 financial crisis. The record high was 2,069.50, which we did in August of 2020. Now, if you look at the real yield on the 10-year Treasury note, it actually ended the year at negative 1%. So you're giving the government money and you're losing purchasing power. The thing is, that helps out with inventory costs on precious metals such as gold, right? You don't really care that you have to pay a little bit for an inventory cost when your alternative is to buy a bond where you're literally losing purchasing power by buying it. That's another reason why silver at 26.41 ended the year up 47% for silver. That was the best year since 2010. And remember to keep an eye on the gold-silver ratio. So at one point you could see in the mid-year there that silver was undervalued. Now it really shows that gold looks like it's undervalued. So maybe gold would be have a chance for a better run now after this. Looking at the other commodities, you had cotton, platinum, soybeans, all going up incredible amounts. And then you have the Wall Street Journal Dollar Index, which was down 5% in 2020 across, it's betting against, 16 other currencies. And to see the US dollar be like devalued like this, as you have stimulus bills, you have the tax revenue going down, you have deficits going up, it's pretty crazy to see that. Then you have real estate. Now there's low inventory because the single family homes can't be sold when people are stuck in quarantine living in them. And yet total existing home sales were up around 26% from a year ago. The Case-Shiller home price index was up 7% from last year. The median home price in the US actually hit $320,000. That's the highest point ever. It did that in 2020. In the same year we have recessions and pandemics, the world ending. It doesn't matter, the home prices still go up. Maybe because the dollar is being devalued. On top of that, if you look at the average salary in the US, it's around $56,000. You would need 5.7 times the average salary to buy a house, because that's a lot of, it's higher than most real estate experts would advise. A lot of investors or real estate agents would say that you want to spend 4 times your income potentially to purchase a house. And we're already at 5.7 for the average person in the United States. So we're a bit above that already. Then we have to talk about bonds. Bonds, just a crazy year, nothing makes sense. The negative yielding debt worldwide has now reached $18 trillion. So people are giving away their money for free. Money is everywhere. It's sloshing around, doesn't know where to go, and it seems to be going into financial assets. The US now had the lowest yielding debt in 200 years. Deutsche Bank came out with a report on that, and basically we're saying, what's going on here? US corporate debt for the first time ever reached negative real levels, so real yields. So when you have a real yield, remember, you're losing money in the end. Even when the bond pays you back and you're getting the yield over time, you're losing money. Then you have crypto, which opposite of this has been doing really well. You have the battle for Bitcoin, the battle of Bitcoin going on. Just always keeps continuing. Does it go up? Does it crash? Is it the most secure asset ever? Is it the worst? It was up 224% for 2020. And it ended the year around 29,000. Now it took 11 years to get from 0 to 29,000, right? But then since then, just recently it hit 40,000. So the chart's actually going parabolic now, and it's very important because when you see that chart going parabolic, when the price line goes up like that and you see the dots for the parabolic move above that price line, that means that it's going to flip and it's going to have a sell-off. Then you have the baby coins. They're all following Bitcoin, the OG, the mama bear. Bitcoin is kind of the leader, the original, and then these other cryptocurrencies like Ethereum and others are doing well. Then going into the collectibles market, you have classic cars, watches, whiskey, wine, toys, sports memorabilia, collectible cards. I did a video on the Pokemon and collectible card craze of 2020. So prices are going up and down on different very specific things that you can get in those markets. But on a trend, they're going up, right? Record IPOs, 454 offerings on US exchanges for initial public offerings for companies. They raised $167.2 billion for all of these offerings. And how did the average IPO perform this year in 2020? It was up 70%. That's an incredible return if you just buy a stock right when it first gets on the exchange. Now, if you look at the 2020 market action since the post lows in like March, April, it played out almost exactly the same as it did in 2009. The S&P 500 is up 67%. Then if you look back to 2009, it was up 64%. It kind of mirrors this, right? Mirrors what it did in the past. Then if you look at the CARES Act, that was double the stimulus bill that we did back in 2009. So you see where the stimulus and everything that you need to do to kind of jolt the economy, it has to get larger and larger to have the same or less and less of an effect. But yet there's money everywhere, right? The national budget deficit this year was $3.3 trillion. You had the $900 billion stimulus deal passed right at the end. You had money going out to every person, and some of the people really need that money, and then others decide, hey, this is a great way I can speculate in the stock market now. I mean, it'd be great if they just kind of gave money to everybody to just make the stock market go up nonstop, can't stop, won't stop, right? Then, did you see all of those investments that I was talking about? It seems like everything's been going up. All of this kind of inflation that they say doesn't exist seems to be going into financial assets. Do you really think that inflation is coming in under 2% right now with healthcare, with the cost of living, with the financial assets going up like they are? It's kind of crazy to think that that's the target is for the Federal Reserve, is that 2%. It shouldn't be higher than that. And then if it is, they can come in and stop it if they need to. So I think it's going to be interesting to see how this plays out into 2021. Can we keep this bubble going now that we have some companies going at crazy valuations now? We have margin at an all-time high. We have options going and setting records. People going into really risky assets. You have, your average Joe on the street saying how they're going to buy some stock or they're going to buy some cryptocurrency and they're going to retire. That's all they need to do. So 2021, let's see how it plays out, and to stay tuned to Spark Finance to find out all the information as it comes out, as I'll report on the stuff as it occurs. Thanks for watching.